Well, coming up, let's go to CommSec now. Tom Piotrowski is live for us. Yep, have a look at the markets. Tom, hello, how are we looking?
Yeah, Pete, we're going to get off to a positive start this morning. The futures are telling us that the ASX 200 should be up by about 1/4% when we kick off, so that's welcome. But also in terms of what we saw on Wall Street at the moment, whilst the improvements aren't sort of breathtaking by any means, we've got the S&P 500 up by around 0.2%. It's worth pointing out that we have seen an extremely constructive November so far. You've seen the S&P 500 since the end of last month to where we are now improved by about 11%. And last night we saw some very heartening news in relation to the performance of the US economy in the last quarter. So you get a series of revisions. They have a couple of cracks at getting the number right, and this is the second revision, and it came in better than expected. The US economy expanded at a 5.2% annualised rate, which was above the 4.9% that we'd put together as the last estimate. So point being is that the US economy is doing extraordinarily well, notwithstanding all of the rate hikes that we have seen. And indeed, the markets are now factoring in rate cuts because within the measure, we saw prices being contained. We've got an important inflation measure to look at on Friday night as well to end the week in the United States. So it's all shaping up in a rather virtuous manner. And we've seen a pretty substantial drop in long-term interest rates, which has been supportive for technologies stocks this session. So as an example, one of the measures that we look at for the technology performance is the Philadelphia Semiconductor Index, and that measure was up by as much as 2.5% in early trade. It's up by 1.5% as we speak, but it's been a pretty positive session for Wall Street overall.
All right. That's good, Tom. Thank you.